Welcome back to Investing Talk Podcast. Today, we're taking a closer look at Cemex. That's CX. We've got a few recent reports and analyses here. And for you, our listener, if you're looking to get past the noise and understand what's really going on with them, well, that's what we're here for. We'll pull out the important bits, maybe flag a few things to watch.
That's right. We've got a due diligence report from May 2025, a couple of other detailed analyses from around the same time, May 6th and also May 2025. They cover quite a lot: financials, business factors, management changes, valuation, risks, how they compare to peers, basically the whole picture.
Okay, great. So let's jump right in. How are their recent financials looking, according to these sources?
Well, for the first quarter of 2025, net sales came in at $3.6 billion. Now, that's actually down just slightly, about 1% year over year if you compare like for like. Seems like lower volumes were the main driver there, kind of canceling out the price increases they managed.
Lower volumes, but prices are up.
Yes.
Interesting. Any idea why volumes might be down? Market conditions?
Yeah.
Competition?
Good question. The reports don't really spell out the exact reasons for the volume dip. That's something you'd maybe need to dig into earnings calls for. But here's the interesting part. Even with that Q1 sales dip, the consensus forecast for their full-year earnings per share for 2025, that's actually jumped up significantly.
Really? How significant?
In just the last few weeks, it went from about $0.63 up to 75 cents per share. So that signals a much better outlook for their earnings overall for the year.
Okay, $0.63 to 75 cents is quite a jump in optimism.
Great.
But wait, didn't you say Q1 itself? How does that fit with their actual Q1 results?
Right, that's where it gets a little contradictory, perhaps. On April 28th, they reported their Q1 EPS at 0.08 cents, and they actually missed the revenue estimate, came in at about $186 million versus a forecast of around $214 million.
So how do we score that? A missing Q1 revenue, but the full-year earnings forecast goes up. What's driving that optimism for later in the year?
It's a bit of a puzzle, isn't it? Analysts might be banking on stronger performance later on, maybe better pricing holds, maybe costs come down, or perhaps they expect demand to pick up. Infrastructure spending, maybe rate cuts, boosting construction. The reports don't explicitly say, so we're reading between the lines a bit. But that's the likely thinking.
Got it. So a mixed bag on revenue and actual Q1 earnings, but a rosier view for the full year. What about profitability in Q1? How did that look?
Their operating EBITDA for Q1 2025 was $601 million. Now, that's down 10% compared to last year, again, on a like-to-like basis. And that's put down to those lower volumes we mentioned, plus some operational challenges they ran into.
A 10% drop in operating EBITDA, that's not small. Definitely something to watch.
Absolutely. You'd want to see if that trend reverses in the next quarter or two.
Okay. Now, thinking about value, I know you said the reports don't give specific PE or debt-to-equity ratios for Cemex right now.
Yeah.
But any context on valuation?
Not specific numbers for Cemex, no. But they do give us an industry benchmark. For construction materials, the average PE is usually somewhere in the 15 to 20 range. So, that gives you a reference point if we see Cemex's number later. And the reports also remind us Cemex historically carries quite a bit of debt. It's a capital-intensive business, so that's not totally surprising, but still key to monitor their balance sheet.
Right, always important in this sector. Okay, let's switch gears to shareholder returns. What about dividends and the stock's performance?
They paid a dividend, 0.0207 per share back on March 18th, which works out to a payout ratio of about 8.33%. Historically, their dividend yield has been pretty low, often under 1%.
So probably not a stock people are buying primarily for the dividend income.
Probably not, no. More about potential growth or value.
And the stock price itself, how's that been behaving?
Recently closed at $6.39, but look at the 52-week range, $5.67 all the way up to $9.27. So quite a bit of movement there, volatile.
Wow, yeah, that's a wide range.
And interestingly, at the start of May, it was trading around $6.16, which was already near the top end of short-term forecasts. Plus, there was that day, April 25th, where the stock jumped almost 5%.
Almost 5% in one day. What triggered that? Was that linked to the EPS forecast boost?
Seems like it. That upward revision for the full year and just general optimism about their U.S. growth strategy, especially with the new CEO.
So the market reacted positively to the future outlook, maybe overlooking the Q1 miss for a moment.
It looks that way. Sometimes future potential carries more weight than the immediate past results,
Makes sense. And speaking of market views, it's interesting. StockNews.com upgraded them to a buy on May 3rd, right after the Q1 report. But the overall broker consensus is still a hold.
Yeah, that split highlights the uncertainty, doesn't it? One firm sees enough positives for a buy, but the broader market, or at least the consensus of analysts, is saying, let's wait and see. Needs more evidence, maybe.
So definitely conflicting signals there for you as an investor to weigh up.
Mhm.
Let's zoom out. Tell us about Cemex in the broader industry. What's their position?
Well, they're a big global player, a leader in cement and ready-mix concrete. And a key part of their strategy now seems to be focused on growth, specifically in the U.S. market, under the new CEO, Jaime Muguiro.
Okay. And what gives them an edge? What are their competitive advantages?
Cost leadership seems to be a big one.
Yeah.
They achieve that through vertical integration, owning different parts of the process, and just their massive global supply chain. Plus, they're putting a lot of emphasis on decarbonization, aiming for those 2030 targets. That sustainability angle could be increasingly important.
Sustainability is definitely becoming more critical. What about the overall industry climate? Any tailwinds or headwinds?
Potential tailwinds, yes. If the Fed does cut rates, that could boost residential construction. Plus, infrastructure spending is always a potential driver, but there are risks too. Energy costs are always a factor, very volatile, and the cost of meeting carbon regulations is significant.
And it's a cyclical industry, right? Tied to the economy.
Very much so. The reports mentioned that Q4 of 2024 actually saw sales declines across the sector, so it wasn't just Cemex. And their competitors are feeling margin pressure too. It's an industry-wide thing right now.
Okay, you mentioned the new CEO, Jaime Muguiro. He took over early 2025.
That's right. And he's not new to the company. He's been with Cemex for nearly 30 years. Lots of experience there.
So that signals continuity maybe, but also that U.S. focus you mentioned.
Exactly. Continuity, but also pushing that growth strategy. They're also talking a lot about sustainability and using digital tools for customer engagement. That seems key to their direction.
All right. Let's talk risks and opportunities, specifically highlighted in these reports. What stands out?
On the opportunity side, one analysis suggests the stock might be undervalued. Analyst price targets average around $7, while the stock's been closer to $6 recently, so potential upside there.
Okay, potential undervaluation.
Yep.
And the risks.
Several key ones. Macroeconomic sensitivity. What the Fed does matters a lot. Margin pressure is a big one from energy costs and competition. And because they operate globally, currency risk and commodity risks in emerging markets are always there. That recent EBITDA decline we talked about, that's a concrete example of these pressures playing out, a definite red flag to keep watching.
Got it. How do they stack up against their main competitors, Holcim, CRH?
Size-wise, Cemex is smaller. Their market cap is around $9 billion. Holcim is estimated around $40 billion. CRH around $50 billion. So significantly larger peers. Their focus is also slightly different. Cemex is really strong in cement and urban solutions. Holcim pushes sustainable building solutions more broadly. CRH is big in aggregates too. These reports don't give us a direct financial comparison like PE ratios side by side, unfortunately. You'd need to look elsewhere for that level of detail.
Okay, so bring it all together then. What's the overall outlook and what are the key takeaways for you?
Well, potential catalysts could be things like infrastructure programs getting going. That would boost demand. And making real progress on their net zero emission goals could attract more ESG-focused investors. The biggest risks seem to be prolonged high interest rates hurting construction and energy costs staying high and squeezing those margins.
And the general recommendation seemed to be.
One report summed it up as hold with caution optimism. The valuation looks potentially attractive based on sales, but that falling profitability is the main reason for caution. They really need to show clearer signs of margin recovery and demand stabilizing before you'd see a strongly bullish case, it seems. Though technically short-term indicators apparently showed some bullish sentiment recently.
So what does this all mean for you listening in?
Cemex is, it's a fascinating situation. A global leader dealing with industry cycles, a new CEO, strategic shifts. You've got these mixed signals, the better full-year EPS forecast, but the Q1 miss and the EBITDA drop. It really shows how complex things are right now. The potential value is interesting, sure, but those risks around the economy and margins, they need careful thought.
Absolutely. This discussion gives you a really solid foundation, though. We definitely suggest you look at their latest SEC filings and keep an eye out for their Q2 earnings report to see how these trends are playing out. Think about what stood out most to you from what we've covered, what needs more digging from your perspective.
And hey, don't forget to subscribe, like this discussion, and maybe drop a comment. Let us know what other companies or market areas you'd like us to explore next time.